Welcome back, everyone. Tim Bohen here, back with Mike Huddie, going over a lot of trading concepts in these videos. Hopefully you like them, and if you do, drop us a comment below, and we really like to answer your questions. A lot of these videos we're kind of bouncing ideas off each other to come up with ideas, but the best videos, I think, are when you drop those comments below and we answer your questions. And then also keep in mind, we move pretty fast in these. I mean, this is YouTube. We're trying to get these videos done pretty quickly, but if you like what you hear, if you're trying to pick up some stuff, get a little more in depth, hit the link below and check out the StocksToTrade team. That's a program where Huddie and I work together in daily webinars every single trading day, teaching you everything from the basics to intermediate to advanced techniques and concepts in live webinars. And it's called the StocksToTrade team because him and I work together to improve you as a trader. So hit that link below and get started today. So today we're talking about scaling into trades. It's a great technique if you're trying to maximize your wins. Now, the other thing is, the flip side is, a lot like margin, if you're scaling in for the wrong reasons, all you end up doing is magnifying your losses. So really what we're going to talk about today is the right way to scale into a trade.
Yeah, and I think the biggest difference you have to make in your mind is, are you scaling into a trade because you're adding to a loser, or you're scaling into trade because you're adding to a winner?
Yep.
And generally, I think, especially for new traders, it's generally the former, that they're adding to a loser. And so, what's your spiel?
Yeah, I mean that's the biggest thing is, I steal a lot of these sayings, but I remember this one from years ago. I like to say losers add to losers, winners add to winners, and and there's the age-old saying, let your winners run, cut your losers. I mean, all of these things mean the same thing. But I mean, especially as a new trader, your number one goal is to play defense, okay? Your number one goal is to protect your account. And I don't care if you're making $5 or $50 a trade, but if your losses, and I know this, I'm gonna say this and you're gonna be like, well, no kidding, Tim, but so many new traders do this. If your losses are bigger than your wins, you're never gonna get anywhere. You're gonna grind your account to nothing and you're gonna blow up. So in my opinion, and we're gonna kind of focus on the short side when we're talking about this scaling in, if you're adding to a loser just because you don't wanna take the loss, that's how you blow up. Now, if you're adding into if you're red on this trade and you're adding into resistance levels or into smart levels, that's a different story.
And so for me, it's always about kind of having that patience for that ideal entry. And you may kind of miss a play or two here, but being meticulous about your entry leads to greater success down the line. And I think it's actually a good habit to get into. But oftentimes, that's not what any of us do. We get corroded by the emotions in the moment of the stock, and we start taking stabs, is what I kind of call it. You poke the stock. And that can be really dangerous for short selling because you face things like unlimited losses. You risk unlimited losses. I mean, the stock goes to one, if you're in at $1 on a stock and you're short, and it goes to 2, you just lost 100% of the value of your money. But what if it goes to 3, 4, 5, 10, 40? You can lose more than 100% of the money that you put in. You risk unlimited losses, and that is a very dangerous situation for the longevity of your account. And if you get stuck in that situation and you freeze and you don't know what to do, then that equals blow up. So the question I get a lot is, do I scale in, and how do I scale in? And
that's what I was just about to ask you.
and I have a hard time. I have a hard time personally scaling in because for me it's not about amassing the most amount of size, although it is sometimes about maximizing profit potential, and it's a very fine line. But here's what I generally tell people, and here's the reason I tell people this. I find that scaling in can oftentimes produce a mathematical unprofitable equation where the times that you're right, stock's going up and you're trying to short into that strength to get somewhere near the top and have a risk in mind and then ride it back down. So what happens is, it spikes a little bit of the way and you put 25% of your position in, and the higher it goes, the more 25% you're gonna put in until you're at your max position for whatever that is for yourself. And what that equation creates is, sometimes the times that you're wrong, you're gonna be full size and then take a loss. The times that you're right, you're gonna be 25%, maybe 50% of your position and then start riding it down, but you're not gonna have your full size. And so mathematically, when you're taking losses, your losses are gonna end up being bigger than your gains.
Right. And I totally agree. And my opinion is, You know, especially on the short side, especially as a new trader, scaling in is great, but I think, and you know, I'm an old guy, I'm almost 65 now, you know, I think you should only, as a newer or even intermediate trader, I mean, maybe you've been trading for a while and short selling is new to you, I think you should be only adding to a winner. And again, this is conservative. Okay, you know, you might hear different things out there, but I'm teaching the conservative approach because I want you to stay in the game. I don't want you to blow up. So if you're shorting some parabolic candle in the morning with that starter size, 100 shares, 200 shares, you know, whatever your account is, maybe it's 1,000 shares, I say wait for that stock to start fading, whether that be mid-morning, late day, then start adding to that size, because then at least worst case scenario, if it goes back to that high of the day, you know, you're out for a small loss. But if you're adding if you're adding all the way up and you haven't built the discipline and you haven't been there before, you're almost certainly risking disaster. So my opinion is the conservative side, if it's a low float stock, a huge runner, only add to a winner, and that's the best way to stay safe. So.
And for me, it's about, again, seeing the specific pattern or the specific daily chart that you're focusing on, seeing that 1,000 times so that 1,001st time you know exactly what you're doing. And you've seen this before and it's familiar. And my take on the whole thing is, you know, meticulous entry, be patient. If you miss the play, so be it. It's better than, you know, putting a bunch of money in a stock and taking that loss and destroying your confidence, making you hesitant for the next play, and, you know, bringing down all that hard work you've done to build yourself up to whatever state that you are in at that moment.
So as I said, you know, one of my favorite sayings when it comes to scaling in, and you know, you could write this one down. It's a good trading rule I think is, you know, losers add to losers, winners add to winners. Sounds simple, but I think it's a great trading rule. So, you know, obviously Huddie and I have kind of a different approach to stuff, and you can see that, you know, little different risk profiles, little different styles, but I think that's one of the great things about the StocksToTrade team. And hit that link below and you get, you know, a year worth of webinars hearing these different approaches. And I think it's a great way, you know, even like if you were back, remember when you were in sports, and you had different coaches with different opinions on different things, and ideally, you take a little bit from each coach and you apply it, and it helps you excel.
Yeah, there's no real one way to do, there's not one way correct thing to do things, but at least we can teach you guys from our experiences that might, you know, take you out of a disaster situation or put yourself in a very favorable situation.
Well said. So, as always, click that link below, click the link below to check out the StocksToTrade team, but also, subscribe to our channel. I think, you know, we've got hundreds of videos. We do podcasts, we do chart reviews, we do live trading. You know, there's so much stuff on the channel for you to learn trading. And then also ring that bell to be notified as soon as a new video drops, as well as we go live. And that's the great thing. If you ring the bell, you'll get notified as soon as we get live. Thanks a lot, and we'll see you next time.